NVP here, and everyone's well on this really hot Saturday morning. We're going to have a scorcher in the UK today. It's been a while since I produced a video. Sorry about that. I'm just going to have a quick run through where we are at the moment. As at middle of we're into July now, middle of July-ish, 2013. This is Trade to Win. You're probably familiar with Trade to Win. If you're not, go there. It's quite an interesting forum, set of threads and forum about general trading, but quite a bit of forex in there as well, and that's where I tend to sit and live and post comments and thoughts. Here I am. You go to the forex area. Just going to pull this up a little bit, and you will see there I am, correlation trading, basic ideas and strategies. That's me, and I've got over 500,000 views now, which is not too bad at all, to be perfectly honest with you. I think there's a few others there, but I think I'm way ahead now in terms of people that follow and view me. So thank you for that, everybody. That is much appreciated. Much appreciated. Okay, we've jumped into the into my thread now, and I've dug back to March earlier this year, where hopefully you can see on the screen there. Here's a slide. It's part of a slide deck I produced way back for talking to some people. And I talk about the 7 Ps of trading. This is what I use for trading my FXCorrelator. This is what I use for trading strength meters and utilizing correlation between different markets, and indeed the correlation between various individual currencies. So I'm going to quickly run through this right now and just give you again, hopefully, just a small insight into the way I personally trade the markets, alongside the stuff I offer for free here. Obviously, the stuff that I offer for free at my thread here at Trade to Win, it is very high level. It's just touching the surface. I've spent 10 years or over 10 years now looking at this kind of stuff, and I have managed to dig much deeper than that. But let's just go through this again, and I'll just give you some ideas or prompters for your own thought process in trading. So let's go through these one by one. When I'm looking at my standard strength meters, of which you can download a copy for free, I look at these kind of things. So number one, the first P, power, the strength of each currency. Just by simply watching the speed and direction and power and kind of sheer distance that a currency is creating against the zero. Remember, all currencies are diverging. They're either diverging upwards from the zero line or they're diverging downwards. Just look at the sheer power of that, the speed. How many bars does it take to move very quickly away? And what distance has it achieved from the zero? That gives you an idea of strength. And clearly you're there to try and target and follow anything that is accelerating away from the zero at very high speed. You know, you can't predict everything with 100% perfection, but that's surely going to give you an indication. So I'm always watching my power levels of each individual currency. Number two, the position of each currency relative to one another. Again, trying to understand where what these currencies are doing. Is there anything has a currency managed to break away from the others, or indeed are two particular currencies showing, you know, a strong move, and the others are not moving? This is the kind of things I'm always looking for: clues, indications to give me an idea of whether I want to trade or not. The partnerships of currencies. Now, this is something I do talk about quite a bit. Historically, there have been certain currencies that do tend to move together with a high percentage correlation. So things like, for example, easy ones like the Aussie dollar and the New Zealand dollar. That is obvious, isn't it? But there's others that are not so obvious. And as you know, if you follow my thread here, I've always tended to watch the US dollar and the yen. If they're generally moving together in harmony on one side or other side of the zero on whatever setting you've got, that generally is an indication that it's probably best to trade with them in the direction they're going, and obviously trade other currencies against them. When those two are moving together, it's quite a good indication. Although more recently, those things have changed, and because of what the Bank of Japan has done and various other things, and the ridiculous game that is being played with currency destruction from quantitative easing, it's become a bit more of a lottery. But again, look for partnerships. Some may be more unusual than you think, but if you look hard enough, if you watch the strength meter, you know, day in, day out, you'll start to see where you think that's interesting. Now, that's a partnership I may want to follow or take note of. Polarity of currencies, who is above or below the zero. As you know, in my current basic system, my free system, all I tell people to do is when certain patterns are set up, you look for to buy one currency to buy currencies that are above the zero and sell currencies below the zero. That's it. That's the simple polarity approach. You can actually not do that. There are other ways you can do it, but that is very, very advanced, and I don't teach it here on my free thread. There are other things you can do which are not necessarily to do with purely above and below the zero, but it can be very, very interesting as an approach. So very simple polarity. Buy the ones above, sell the ones below. Okay, next one is very, very important. What kind of periods are you using? Time frames, moving averages? Are you using combinations of both, multiple charts? This is very, very key for any form of trading, whether you're trading commodities, whether you're trading Forex, whether you're trading equities, indices, whatever you're doing, you have to be very clear on what time frames you're trading, what kind of moving average settings you've got, if you are using moving averages, and so on. It is very important. That is what defines you as a trader and defines your overall style. So be very, very clear about that. The same as I'm very, very clear about how I approach these things. And you can combine them. Obviously, you can use a higher time frame or a higher moving average against a lower time frame, lower moving average, and it gives you an idea then of where your strategic direction is for your currencies. And then obviously you can go more tactical on the lower time frame and trade, say, possibly with the trend. That is generally the most popular approach. Although, believe me, trading against the trend is just as powerful at times, especially if you're only hunting a smaller number of pips. That's the name of the game. You have to focus and be very, very specific as to what you're achieving and what that time frame is. Okay, P for perspective. The G8 relationship to equities, gold, bonds, commodities, etc., etc. G8 being the 8 currencies that I use on my particular strength meter here at Trade to Win. And perspective is just the interrelationship. That is the correlation. That really is the meat of it. It's the correlation between those. I could spend years talking to you about how these relationships work, but at the end of the day, you have to make your own decisions. I would try not to get too complicated. Don't mix too many things in. If you look again at my free thread at Trade to Win, I tend to watch the Dow, the US Dow, and try and see whether that correlates with anything that's going on the G8. The other stuff, it's really up to you. Gold, I actually trade on my gold meter, again available free, but again that's more just looking at the relative strengths as opposed to saying is gold moving for or against a multitude of currencies or even other markets. One of the things I will say about gold, obviously, is that gold generally is accepted to be traded in gold US dollars. So obviously when the dollar is showing strength individually or weakness, obviously that will be a major kicker towards whether you're trading gold and how it works. So very beware of that. But generally, yeah, perspective is another word for correlation, intermarket correlation. A guy called John Murphy wrote a fantastic book on this, and I recommend you looking at that if you want to get into that more. There are more recent people out here that trade using intermarket correlation, especially on some of the bigger brokers. But what they're really doing is copying what I wrote. I can assure you that. Okay, last but not least as well, I keep an eye on the politics. Politics, economics, global market news, and events that happen on a daily basis. Clearly, if something big happens out there, a speech is made by somebody in one of the major powers, it's going to move the markets, and that's what you need to watch for. You either then choose to go and be a news hunter, or you're somebody that avoids news. Whenever there's going to be a big event or something, then don't trade. Wait until it's happened. Wait for the dust to clear and then go in and start trading again. I can do either. It depends how I feel on the day sometimes. NFP, the US NFP is obviously the big monthly event, and that's something that's always worth pursuing or not pursuing. But usually you're going to get fireworks on that day, as in the run up and actually post event. Okay, that's about it from me. I've just taken you to my thread again. This is what I literally posted a little bit earlier today. And just commenting on what's happened during the week. I've got an X-Men up at the moment there, and one of my more standard charts at the bottom there if you want to link and have a look. All it was showing me is that US dollar had a terrible week this week just gone, but actually the Aussie dollar was even worse. If we just click on this, just show you what I'm looking at here as we fire up. Sorry if you can't see that too clearly, but down here you can see this is a weekly bar. A weekly 1-1. So it really just follows what happened during the week from the start of the week to the end of the week. And these are called my X-Men. So this is an X version of the straight line. So we don't have the lines messing things up. It's much clearer. And down here, as you can see, the orange Aussie dollar got below the dollar, amazingly. You know, I talked about correlation earlier. There you go. There's a New Zealand dollar hanging very, very tight to the Aussie dollar there. So those three all below the line, big moves this week. And if you were selling them this week, you did really well. The others were fairly tight clustered, but obviously all above the line. So they're all positive buys this week. Really, if you were trading into trading these guys up here, there wasn't much to be made on an overall weekly basis. These were the ones you were selling. So some good action in the week. And just looking over here, this is my 4 hour on a 23 Delta 3 setting, and again you can see just what happened there. You can see that boy oh boy, the dollar got hammered this week, and is slowly recovering back. And as you can see, that was the opportunity. This is the turquoise New Zealand dollar and the orange Aussie dollar here that came south. So those were the three, very similar, spookily similar to what's happening over here. Everyone else stayed north. Dow, great week, kept climbing all week, and that usually indicates that you should be looking to sell the US dollar and or sell the yen. Yen stayed high, so not a bad week for the yen actually. Okay, that's me signing off, NVP signing off. I will try and put some more videos in, hopefully give you some more explanations of what I do and where I am. But you know where I am at Trade to Win. Please come and find me, and good trading. Keep it simple. Cheers. Bye-bye.